Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted today to be able to speak to CEO Tarek Fadel and CFO Vicary Gibbs of Fidel Partners, a leading and specialist brand compliance, rights, and royalty management software platform. So welcome, gents.
Thank you.
Thank you very much.
Well, lots been happening since we last spoke, not least today's inline first half results and positive outlook for the rest of the year. But before we sort of dig into the details, Tarek, I don't suppose you could give us a quick bird's eye view of what the sort of demand picture's like at the coalface, given the macroeconomic backdrop.
Sure. So we're starting to see the macroeconomic environment change for the better, especially within our blue chip customer base. So as you know, many of our clients are international, global, blue chip in the top 10 clients in their respective industries. And we are seeing budgeting and spend be stronger going into 2024 than it was into 2023. So at a macro level, I think that's quite encouraging. And in particular, demand for our solution set has also seen an uptick. So as you mentioned, we are very focused on brand compliance and working with global marketers, helping them effectively manage how they use their marketing content, where they can use it based on all of their license agreements that they have with the photographers or the high-end talent, their brand ambassadors, etc. But as well as on the rights and royalty processing side. And so we deal quite a bit with massive publishers, both in the trade and educational publishing side of the equation, who are now looking at doing more systems deployments in and around their royalty accounting treatment and their licensing treatment. So we're very encouraged by what we're seeing. There's, as you can imagine, also with all this activity that's happening overall in content creation and AI-based generative AI content creation, there's a lot of excitement around, how can global marketers lower their total cost of content creation? But then there's also a lot of concern as to whether or not they can actually safely use that content that's being produced by machine learning algorithms. And so we think that there's a very bright future there as well in terms of expanding the compliance to also not only cover the traditional agreements that these marketers have, but also the machine learning based images and videos that are being produced.
Yeah, well, it certainly does seem as though the software's in the right place at the right time, particularly when you get all the generative AI with the images and stuff like that. So just in terms of sort of specific customers, have you won any sort of logos over the first sort of like 9 months?
We have. We've won some incredible logos. Some I can share, some I can't share, unfortunately.
Yeah, you have to kill me otherwise.
Right. But we've won a large deployment with Philip Morris out of Geneva, to help them manage all of the usage rights for their marketing content, as well as track and police where that video and image content is residing, so that they can ensure that they actually take it down before they hit a compliance issue with the content. Interestingly enough, a lot of the brands that come to us have had multiple sorts of copyright compliance issues that they've been dealing with. All of them, I should say, unknowingly, whether it was them or their agencies, have actually, used that content because they're just not tracking the content and its rights properly. And we represent effectively a governance mechanism, if you will, that allows them to actually manage that compliance moving forward. We've also won a deal with Sanofi, a large healthcare and life sciences company, mainly around their over-the-top and consumer division. We're seeing a lot of activity, pipeline activity and interest coming to us from several industries that market directly to consumers. And so if you think about fast-moving consumer goods, beverages, beauty, luxury, automotive, where there's a direct-to-consumer type relationship and a lot of spend that's happening on the marketing, those are all opportunities that we're either finding or are coming to us. Same type of problems. We need to manage our content for marketing. We need to better manage the usage rights, and more importantly, be able to track where our video and image content is on social media and our own websites and partner websites globally.
So this is a really sort of expanding market then, I guess, not only from your existing customers who are taking more than one of your modules, one of your project suites, but also, as I say, new customers who need brand protection and in the market.
Absolutely. Well, we've also done 2 deals that I cannot name. However, one of them happens to be one of the largest beverage and food companies, US based, but multinational.
I can guess that one then. I won't name it, but I can guess it.
We won't name it. And then the other is this one is, it might be harder for you to guess, but also one of the largest personal care products company that has many brands, is US based, but definitely a multinational, multi-billion in revenue, all around the same exact flows of how do I actually manage my marketing content, manage to that content, and track it. So we're seeing here a very nice repeatable use case that we're just taking across these industries.
Okay, just pivoting now to the financials, Vicary. I don't suppose you could quickly take us through sort of like sort of the top level numbers in the first half. I did see there was a sort of like a contraction in the revenues, but that seems to be anticipated, and also a bit of visibility into the second half, because obviously there's quite a bit of heavy lifting still to do in the last 6 months.
Sure. So H1 contraction predominantly from service revenue. As you say, expected. Some of the implementations had come to a natural end, so no surprises there. A couple of the declines contributed to some delays that customers have put in, either through corporate action or through the macro environment. But as we're finding now, some of those conversations about delays are starting to unwind now, and we see that activity coming back in the future periods. In terms of the weighting, because market guidance is give or take around 14.6 for us for the year. So it does seem, obviously, the arithmetic of H1, you don't double that and get to 14.6, but that's a function of the nature of our contracts and the timing of certain renewals. We've put a lot of detail into the interims to help people understand, but the simple explanation is many of the renewals are coming in the second half of the year, and this is renewals of, in some cases, annual contracts, in some cases, multi-year contracts coming to an end. But what we're seeing as a trend is a number of contracts are now subject to certain types of different revenue recognition, and some of the contracts that are renewing have revenue recognition where you recognize the revenue in full up front because certain conditions are met, such as single tenant, private, cloud hosted, non-cancelable in nature, etc. So it's the equivalent of, the delivery of the goods are done at the point of sale. Hence, you recognize it up front. And that, from our perspective, obviously, there's a lot of work that goes into revenue recognition to make sure, A, obviously it's accurate, B, clearly it's compliant with US GAAP rules, which we report under. It's reviewed even at the interim stage together with our audit partners. So we're very confident in the levels of revenue we expect in H1, and hence we're sitting here very confident about being very much in line with what the market expects us to do for the full year.
Yeah. Okay. Well, just to help investors here, let me just be one of those customers. I've got an annual contract, and I'm using the basically I've got the cloud tenancy or whatever like that, and I've been a customer of Fadel for the last 5-6 years, etc. I've renewed every single year, etc. Is that the kind of customer who is being built into your estimates there? Because I know your churn's really low, isn't it?
So within the IPM customer set, which is the majority of our revenue today, yes, the churn's incredibly low. So a number of the renewals, and certainly by value, the majority of the renewals are within IPM. So they're customers that have been on platform for multiple years. They're part of an expected contract, renewal cycle, and it's cycles that we've been through before with these customers. So there's nothing unexpected that is likely to happen. And so from our perspective, we sit here going, it's a process you go through. You know, it's not a Netflix subscription where you click a button and you're done. Obviously, it's we're dealing with some of the world's largest and most complex businesses, but it's a process that's tried and tested, and hence to come back to the point, we're very confident that what we said we will deliver for full year is very much in line with what we're intending to deliver for full year.
Okay, good. And then just on the costs there, Vicary, I know we've been recruiting quite a few of the sales guys, and they're hitting the ground running as Tarek's going to get them cracking the whip and get them in order, etc. But what's that mean in terms of sort of the cash runway ahead?
So when we IPO'd, we laid out various buckets of spend, if you like. We've gone ahead with deploying that capital to chase our growth plans. Yes, we've invested, I would say, in the first full complement of people within the sales team and the lead generation teams. So the marketing function that supports the sales teams. I think for what we think we were going to spend for 23, we certainly don't expect to be over budget on that. So I think cash burn rate is very much in keeping with what we expect, and the ramp up of those investments is again very much in keeping with what we expect. But we're coming to the end of September now. October is the beginning certainly for us and for many of our peers that report January to December. It's the start of budget season, so we'll be looking at how we deploy that capital through the course of next year. Again, targeting those investments that we laid out at the time of the IPO.
Yeah, good. And Tarek, am I correct in thinking, just going back to that customer example, if I've been using the IP software for the last 5 or 6 years, etc., switching costs would be immense for me, wouldn't it? Because all my accounting team and my rights team will be embedded in your software. It's going to be pretty tough for me not to renew in the last 3 months because exactly. I need to recruit for wholesale lift and shift my employees.
Yeah, well, it's twofold actually. One of them is what you just mentioned, Paul, which is the employee usage of the software. And we have clients who have over 200 people using the software globally, for instance, on their accounting basis. But the other part of it also is the software, when it gets configured and installed and integrated into a blue chip client base, as you can imagine, has multiple tentacles into the other systems. And so when you're managing intellectual property, there's a tentacle into the financial system, into a product information management system, sometimes into a content management system. And so those are built over time. They're supported, deployed over time. In many instances, we support that for our customers as well. Those you just don't switch off overnight. I mean, even today, for instance, one of our largest publishing clients is looking at upgrading their financial systems. And they're looking at us to also provide an update to the new financial system. So that's providing quite a large opportunity on the services side to upgrade those interfaces. And so the question is not whether they're going to move off of us or not. It's can we support newer systems, and they're paying us to support newer systems.
Yeah, you raise a really good point there, isn't it? Because it isn't just employees, but Fadel's controlling all my data as well. So if I want to ever consider going somewhere else, I've got to basically migrate that across, and that you'd certainly get forward visibility of anything like that anyway, because you can't do it immediately. That's for sure.
So confidence in our numbers.
Yeah. So Fadel, I'm sorry, Tarek. So just in terms of the sales stuff, how are they bedding down now in the business? Because obviously you've been recruiting quite heavily. It's sort of like getting them, because you mentioned that the demand cycle is now improving towards the end of the year.
Yep. So the demand cycle is improving, but also the fact that we have more people, looking for deals and hunting. We've put new systems in place that allow them to get better data analysis. Like for instance, we're using some products from Zoom Info, which are quite accurate in terms of helping us identify contact information for the personas that we sell to. And so our reps are going through on a daily basis, identifying new opportunities, new outreaches. We've been doing a combination of webinars, attending multiple events. we came out of the Digital Asset Management Show in New York just less than 10 days ago. And it was one of the best events that we've had in a while. Combination of both, I think, the macroeconomic climate easing up, but also we've become a brand name for anyone looking for brand compliance in the context of digital asset management. And so we've continued to talk to and progress deals with some of the largest CPG, consumer packaged goods companies, beauty companies, fashion companies that we also met at the show and continue to progress those deals. So I'm very pleased with where the demand is and how the team is ramping up in terms of understanding the solutions and then executing on them. And we've certainly uncovered a lot more opportunity just by having more qualified salespeople, in the seats.
Okay. And what's the sort of roadmap on the tech side in terms of new product development? You mentioned obviously you're upgrading parts of the platform to meet customers' requirements. But anything else in terms of AI or?
Yeah, so we've got some really cool stuff that's being planned. Some of it is AI based. So on our digital asset management side, we're introducing. We already have a visual search AI enabled engine that we had acquired through Image Data Systems that we've actually upgraded to also allow us to do video matching. And so we use the combination of the existing learning model plus an enhanced set of features that we've built over the last 10 months. We're going to continue to make that a lot more accurate moving forward. We're embedding some AI technologies as well around auto tagging of images and videos so that as you're uploading content into our Content Cloud platform, we're able to auto tag all of it so that you don't have to manually tag what's in the image video. So that's coming in the first quarter of 2024. We've also added some really cool capabilities around being able to find and match video on TikTok for large brands. And as you know, TikTok has become the single largest video platform for brands. So now we are one of the very few, if not the only vendors who can find that video content for a brand, whether it's on YouTube, on TikTok, on Instagram, on Facebook, on Twitter, and on LinkedIn, match it to their unique videos that were actually generated by their brands, and then match it to all of the licensing agreements and let them know whether something is coming up for renewal or copyright or should be taken down before the talent spots it and hits them up with a cease and desist letter. The other thing that we're also doing is along those same lines, we've gotten quite a bit of customer requests around identifying music in videos. And so the record labels are doing quite a bit of technology work in terms of scouring the internet and trying to find misuse of their copyrighted music. And they're hitting the brands left and right with cease and desist letters. And so we have existing customers who are coming to us and prospects who are coming to us and saying, can you also help me find and match music in my video and let me know that if I'm using it without any license agreements because my brand manager in a specific country has decided to do it on their own, that I would know about that before the record label hits me up with a cease and desist so I can actually get it properly licensed. I mean, again, the world is the corporates are looking to do the right thing. No one's looking to misuse content or under license. Most of it is the unknown. And so we're policing against the unknown. So we're going to be introducing a music matching service as well to the videos in the first half of 2024, probably in Q2 of 2024. That's being planned out now. And then one really exciting initiative on the IP management side as well is around taking our licensing edition of the software that today serves both large licensors and licensees. So think of Hasbro, Marvel, Disney, Bandai, etc., and some other large licensees, large meaning a couple of $100 million in revenue. And we're taking that solution down market. And so we're going to be targeting licensees who are probably in the under $50 million range, but still pay anywhere between $5 to $10 million in royalty revenues to the large licensors, and providing them with a pre-configured automated cloud service that allows them to manage their licensing agreements, but more importantly, manage their royalty submissions to the large licensors, and which would help them with their audit, helps reduce compliance risk, but then also, more importantly, help reduce overpayment of royalties as well, that a lot of times they find themselves making because they're still on Excel sheets.
Mm. Yeah, you raised a really good point, actually, particularly on the music one, because that sort of explains why the price of music royalties and sort of back catalogs has ballooned of late with a lot of M&A, because effectively what you're doing is you're giving them a new revenue stream, aren't you?
Yeah,
Which is
absolutely.
for them to be able to sort of monetize. Yeah. Now, finally, then, Vicary, in terms of future news flow, and also I understand it's your 20th birthday, not you personally, but your company. And the question is, in 5 years' time, at your 25th, what's sort of like the ambition of the company? So, what's sort of like the nightly news flow, and how large and sort of significance would you like the business to get to?
Well, we have an ambition that we're stating concurrent with this. I think in some of the presentations that will start to come out, of 50 and 5.
Yeah.
And that's chasing to grow to a $50 million revenue per year business within 5 years. We're 15 in round numbers today, so it's I think a reasonably ambitious one. It's certainly a very achievable target, and one where in my camp for sure I'd like to exceed the goal of doing it within 5, i.e. get there quicker. How will we get there? Well, what we have as an organic growth engine, I think, is highly scalable, and it's a case of getting the sales engine humming and then adding more bodies to it. But there's also going to be, for sure, opportunities for us inorganically, i.e. M&A, and I think that's a function of a couple of things. The macro environment is certainly seemingly starting to turn, but the prices of businesses out there and assets out there haven't yet necessarily hit rock bottom, and we wouldn't want to invest. Why would you invest today if prices were going to fall further? And I see some people that are struggling because they don't have components of their business aligned to growth markets like we do. So we're trying to find the sweet spot where our equity may be a very valuable currency for helping to grow, but we'll also for sure take heed of the success of our IDS acquisition. We're not just going to go and buy revenue for revenue's sake. It's got to be something that's capable of being really additive to our business, being integrated into our business. So I think the opportunity set will start to flow. But we're not opportunity constrained, and the best opportunities we have today are organic and in front of us, and we're seeing that literally day by day with the news coming in from the sales team. So it's clearly a very exciting future for us in the near term, and it's going to grow very big in the medium and longer term for sure.
Yeah, and I guess probably strategically with the market, if you're competing against with smaller point solutions who are maybe struggling financially, you'll be winning market share. And as you come out, if some of those drop away, then you'll be in a far more even stronger competitive position, I guess.
Look, I think we've got a jump on the market on a number of fronts. That's why we came out and did the IPO in this first half. And we're certainly not going to rest on our laurels. So we're chasing growth quite aggressively.
Yeah. We have a good, also I think a very good land and expand strategy. And so, especially as we introduced these brand vision set of products, where the customer gets a chance to pick a business unit or a brand within their 20 or 30 or 40 brands that they manage globally, and start out small and prove it out within a brand. And that could be representative of a $50,000 up to $100,000 annual license deal. But then as they quickly start ramping up across multiple brands, that will typically grow to $400,000, $500,000, $600,000 over the rollout. And so the land and expand in terms of just even working with some of the customers that we're working with that are the large multinationals, is within even those accounts, going to brand by brand or department by department and rolling out internationally. And so our license terms are set up in a way where as they use more, they pay more based on the metrics. And we've done quite well with that in the past, and we're seeing some very positive signs of that moving forward as well.
Brilliant. Okay, well, thanks very much for your time. Big congrats on the first half. Really looking forward to touching base at the second half, because it certainly looks as though it's all set up to be a really good, a really strong period for you guys, and a strong exit importantly into 2024. So thanks for your time again, gents, and look forward to catching up.
Thanks, likewise. Cheers.
Bye.
Bye.